Hi everyone, back here with another Trading 212 portfolio update. This week I want to talk to you about stocks that I've sold, stocks that I've bought, and stocks that I'm thinking about purchasing and what's next in my portfolio in terms of strategy. So let's get started with what I've sold. So I've sold Coca-Cola Hsbc. I actually sold them shockingly around here. So around the 23.65, 23.50 mark. I decided that it doesn't really fit well with my portfolio and I feel like it was a bit risky. So I decided to get rid of it. And obviously I should have held on for a little bit longer and reaped those massive returns, because my average price was around £23, and if I had sold it literally the following day, I would have got anywhere around the 25 mark. So yeah, that's kind of like a missed opportunity for me, but what can you do? So I'm not too bothered about that. Anyway, as you can see, I've increased my overall portfolio value. So that's mainly because I've added quite a bit to the portfolio this time. And if we move down to returns, you can see my returns are a lot nicer than last week's. Last week's returns was a bit shocking, to be honest. So actually, I think it was around the same. It was around the £21 mark. But obviously, the percentage-wise has gone down. So it's gone from 2.12% to 1.51%, which is going in the right direction, to be honest. So moving down, let's start with BAE Systems. I've not really done much with this. I've kind of like gone for buy and hold at the moment. So as you can see, it's at 5.56% and it's up £1.81, which is decent. It's not bad for 6 shares, so I'm happy with that. Barrett, again, this one I'm keeping my eye out big time. I think for me, I'm more willing to purchase around the 620 mark now. So I'm just waiting for it to hit 620 and I'm buying. With this one, as you can see, up 9.73%. That's £4.62, which is decent. So yeah, that's what I'm planning to buy quite a lot of. BP, I think potentially this one will be sold at some point. I think I might hold it till like January, February, and see what it's performing like. So I'm up 3.47%. That's 68p. BT. So this one I am definitely keeping my eye out for a while. So I'm hoping it to hit around that £1.88, £1.85 mark. So basically, when that hits that, I'm just going to buy a couple of them. Basically, yeah. So this is definitely one for me on my watch list. It's just and it's got an ex-dividend around soon, so probably worth keeping an eye out on that one. Sentiment. So for this one, I don't really know what I'm doing with this one. So I purchased it thinking it was a great price at £1.08. It probably is, but I've already got a sell limit, so when it reaches 120, I'm cashing out on this one. I don't plan to keep it for that long. So if I look at like the last year, the highest it's gone to like 140. So, and of all time, it's around 180, 190, and that is around 2017. So for me, if I sell at 120, it's a nice little profit for me. A couple of pennies. This one's interesting actually. Let's have a look. Last 7 days. So this one has not really much changed. I'm up 10%. That's £1.34. Average price is 66.7p. So this is probably something I'll keep for the long haul. As you can see, I've only got £14 in it. So yeah. This one, wow, this has dropped massively today. So when I last looked at it, it was around here, and it was around the $17 mark. So I was like, oh yeah, it's doing well. So I'm kind of getting my returns back. But obviously it's tanked again. So yeah, so with this one, I'm down 10.65%. That's £30.90. So I'm hoping, so I've got two strategies for this. One is, if it hits the $18 mark, I'm going to sell a couple. Yeah, I'll sell a few of these, and then just buy them back at a lower price. Or if it goes really low, I'll buy a few to bring my average cost down. So for me, Cloudflare is definitely a long-term stock. It's definitely like a 5 to 10 year stock. For me, I think I'm going to try and aim to hit around the 20-25 share mark. So obviously I've got 5 in my investment account. So I'm hoping it goes to around $19-20 and just sell them and then buy them back on my ISA account. With Deutsche Telekom, they have, this one hasn't really changed much. It's kind of drops a little. So I potentially might increase my holdings in these, depending on, because at the moment I've kind of got to weigh up between what I can afford and what I can't, because I've got X amount of budget and it's kind of going to go to something. But obviously at the moment for me, a few other shares which are performing much better and more of an opportunity than this one. So they have announced a dividend of around 60 cents European money, 0.6 of a euro per share. The ex-dividend date is 27th of March 2020 and the pay date is 31st of March 2020. So quite a while away. So probably something that I'll keep an eye out on, and if it drops around like $13, I'll probably buy a few. This one is definitely, now with Line, is definitely one of my biggest stocks. So Direct Line is definitely one of my biggest highlights for this week. It's seen a massive drop around the 12th of November to the 13th, to the 14th. Yeah, to the 14th. 14th, 15th. Yeah, so essentially between the 13th to the 15th, I've been buying as much as I can, just because I've seen it as a buying opportunity, as my previous average price was around £2.88. As this stock pays around a 7.83% dividend yield based on today's closing price, basically I think it's good value for money. So again, this will probably be one of my long-term stocks. You know, Direct Line is pretty a reliable, safe company. If it pay, if we include the special dividend that it paid on December 2018, it works out about 10.9%, which is really good, and I'd be pretty happy with that. So I think over the next week I'll look to see if it's around the 270 mark. If it is, and I'll buy maybe like 20 more shares. So this is pretty much one of my decent buys for this week. As you can see, I'm already up 2.07%. That's 0.76%. So I think if it goes back to the £2.80 mark, it's got some good returns coming in. DS Smith is another good one. It's absolutely phenomenal. I've got 12 shares in this. Average price at $3.48. Current price is $3.89. I'm up 11.69%. That's £4.88. And it also did pay a dividend. So if we look at the history, it paid a dividend of £1.32, which is I'm happy with that, to be honest, because when you look at it, my holdings is only £46. Eon, there's not really much going on with this. I'm just going to keep it and see what it's saying. Moving on to Ford, it's had quite a big increase. I've only got 2 shares. I'm up 1.91%. That's 0.26. Well, that's 26p, to be honest. I'm going to keep this one just for if I see another opportunity, I'll probably buy a few more, but I don't think Ford is probably a good enough stock to put my money in. I'm just going to keep a few just to see what it's saying. Glencore is another risky one. This is quite a volatile one, to be honest. I've got a sell order, so when it reaches £2.60, I'm just going to sell it and close my position on this. Mainly because I've had Glencore for a while, and I think it's probably time for me to get out of this. So I'll probably close my position in Freetrade as well once it's in positive, but I won't close it when it's in negative. Moving on to Hastings Direct is another buying opportunity I see. So again, over the next week, I'll be buying a few more of these. I want to bring my average cost down to around 170 or 173-ish. So I'll probably buy another 10 to 20 shares in this. Again, if we look at Hastings Direct, they pay a dividend yield of, based on today's closing price, they pay a dividend of 7.88%, so it's very similar to Direct Line at a much cheaper price. So again, I'll be bringing my price down for this as well and just increasing my overall position. I just want to quickly see how much times 40. So if I wanted to buy another 40, it's about £68. So I might make that to a nice 100 as well, depending on what the market's saying. Moving on to Hsbc, this is probably another buying opportunity. So this is, for me, obviously, I think this one's probably a bit steep for me, mainly because it's at £5 a share. But I do want to increase my position, so potentially I might round it up to 10 shares if the price doesn't jump up too much. Currently it's at, so I'd probably buy it at 5.73 if the market opens like at that price. Probably buy another 2 to 6 shares in this, and I think it'll be a good buy to keep for long haul, because HSBC is definitely a good bank. You know, they're in First Direct and people do rate that bank. Lloyd's, again, I'm keeping my eye on. Seriously, it hasn't been the right price for a while. Like, apart from here, which I definitely missed the opportunity here on the 11th of November, but it's literally jumped back up again. So keep an eye out on that. I'm being proper tight with Lloyd's, not budging with the 55p per share. New River REIT is the second highlight of this week. This one is pretty much doing all right. So if we look at the last week, it's just literally tanked around here at 185. So this was like the original price that I purchased these shares. So since then, I've been trying to average my costs down, and I've been doing a pretty poor job of it, to be honest. So I've just been average buying, and I'm at 145 shares now with an average price of £1.90. So I'll probably, as you can see, I've got 2 buy orders here, and I'm hoping to bring it to like 189. I'll be pretty happy with that. I'd potentially sell them at like 210, but again, I think I want to hit the 150 mark or maybe the 200 mark in terms of shares, and that'll be a nice dividend. So for example, I know New River REIT pays a decent dividend. They pay 11.66% in dividend based on today's closing price, which is really good. But one thing you have to remember with REITs is they have a withholding tax, and that is 20%. So it works out around like 9.3% or something like that as a dividend yield. So it is still pretty high. So for example, if I put the amount of shares that I have, in the last dividend it paid around £7.83, and that's quarterly. So if I do 7.83 times 0.8, that's £6.26 per quarter for 145 shares, and that's not actually that bad. So when you times that by 4, that's £25, and that's basically 10% of this of what I currently hold, which is a very good return, I'd probably say. Moving on to, I don't really want to talk about any of these. So yeah, that's it pretty much. Excuse me. Twitter's doing pretty poorly, to be honest. To be fair, it's up today, but I'm down 65p. So what can you say? So if we look at my holdings now, Direct Line, based on my Trading 212 account anyway, Direct Line is like taking top spot, followed by New River REIT and then Cloudflare. Hastings Direct isn't too far behind, to be honest. So there is some buying opportunities, and I will be buying a few more shares, mainly in Direct Line, New River REIT, Hastings Direct, Hsbc, and I think that's pretty much it, and possibly BT if it drops. So that's my plan of action. In terms of, I don't think I plan to sell any of these, to be honest. In terms of strategy going into 2020, I think I'm going to stick to what I'm doing at the moment because it seems to be working. So I kind of buy at a good price, and if the shares drop below my average price or around it, I'll keep buying more at that price. Otherwise, I won't add to it. I think that for me, that strategy is working, and I've seen some good returns on some of them. So yeah. If you like this video, like it, subscribe to the channel if you want to see more videos on this. Let me know what you think, if there's any shares that you want me to mention in the next video and what my thoughts are on it. And if you're interested in trying any of these platforms out, you can use my referral link and you'll get a free share. So will I. I think it's worth up to 200 quid, so it's worth a punt. Thanks for watching. See you next week.